Welcome back from that break. Talking about Nigerian Oil Block 2025 licensing round policy. This is no one story that the licenses is taking place on December 1st, 2025, where the federal government of Nigeria will be giving out licenses to companies, both local and international, that will be having oil block in the Niger Delta area to exploit oil in Nigeria. But the question still remains, how significant is this particular exercise that will be carried out? What are the benefits for local companies as well as international companies, and what can Nigeria really derive from this exercise that's coming on 1st of December 2025, where we'll be giving out a new licensing oil block to companies, both foreign companies and local companies. So Dr. Wisdom Enang is here to help us expound on the issue. Doc, very good day to have you on the show, sir.
Thank you very much.
All right. So let's get down to the bulk of this discussion at this point in time. For you, how did you receive the news of this latest oil block licenses for 2025, starting on the 1st of December 2025?
I received it kind of in an elated mood. I'm really excited because, it proves that Nigeria are not only trying to harness a lot of possibilities from the existing reserves, but we are actively also trying to make sure that new frontiers are introduced. Similarly, we are also, right now at this point in time, implementing the drill of drop. So anybody coming forward knows that there is no hiding space. If they get that facility, they will have to develop it for the collective wealth and benefits of the nation. There is no keeping it as collateral. So it's a really exciting point, and it's beginning to look like we will surpass our 2 million barrels per day, production benchmark that we're looking at. I think without doubt, we're well on our way to exceeding that target.
Mm-hmm. Interesting. But let's take a look at the last time we had this kind of exercise. There were issues of funding gap, issues of bureaucratic bottleneck, as well as insecurity within the area of Niger Delta where this company need to go and do this exploration. But for you, what do you think would definitely have changed that we are now going back to give licenses to people to have oil blocks in Nigeria?
All right, thank you very much. So let's put it this way. Even at the height of insecurity in the Niger Delta, we have always had companies come out to indicate interest about owning oil blocks. It's not. What is different is that we know the challenges that context are watching, and we have worked towards making sure that these challenges are sort of mitigated. Yeah, I think that's the word. Now, let's look at the number of the challenges. Before now, the competitive in Nigeria oil and gas sort of have a key reason. One was the cost of doing business here, which was also as a result of so much, the physical terms not being incentivizing the entire process of investment. Number two was the burden of local content. The local content at the point was delaying a lot of businesses to carry on with their jobs because it became a bureaucratic bottleneck. And then the processing time for contracting and all of that. So this is what happens. In between the time in the last round and now, the president has tried to create a debottleneck effect across the various challenges. So let's look at it again. Crude oil theft is one. We have dropped it to about 5,000 barrels per day with the hope that we can drop it even further. Right now, there's a drill or drop provision, which means that you don't come and pick it, you don't have to do it. So there's no issue of wasting time. The president has also preferred what we call production bonus as opposed to sign-up bonus. What I mean is that the sign-up bonuses are now reduced. So you come, get the money, but that money that you're supposed to use for sign-up, use it for development. Where you do not develop, the drill or drop provisions take over, and then you have to leave the asset. It has to be removed from your end. And then we also have a government that is ready to also expand on funding for things like the frontiers, exploration of various frontiers. So we're seeing that all across the various bottlenecks along the value chain, there is a concerted effort. Yes, we're not 100% yet, but there's a concerted effort to create a debottlenecking effect across board so that the new investors that are coming on board will have a better terrain than the previous one. So there is that has changed, and that makes me feel very confident that we're going to see a lot of people. Now, let's say, for example, you've seen the numbers of kind of investment numbers that most of the oil majors are putting forward. Just the other day, there was this conversation around Oriental Energy in Akwa Ibom State, and FPSO was launched, and my executive governor was actually on that occasion. So you could see that debottlenecking the entire value chain has created a very exciting value proposition from the standpoint of the Nigerian petroleum industry, and has attracted a lot of people. These are the things you did not see in the past. The rig count has gone from 8 to about 40, and they're well on their way to about, actually they are 60, but 40 are active, but it's going to climb about 71. So all of these is putting, that means there's renewed confidence in Nigeria as the kingpin of the petroleum sector, or the big brother of the petroleum sector in the sub-Saharan African region, and even in the world at large.
Doc, you discovered that the aim of this current exercise is toward the gas aspect. I know you are very interested in the gas aspect, because for the commission, they're looking at how to deepen our gas exploit and the support energy transition of the federal government of Nigeria. So what do you make of this aim particularly? Even though we are looking at the fallow oil and deep side of the unexplored, undiscovered aspect of the crude oil, but the main target is a gas exploration aspect.
All right, thank you very much. Yes, you're absolutely right. But let me just put some context around the Nigeria's ability to get a lot of economic benefit from industrialization using dry gas from the gas wells. So right now, we have production of gas, but much of our gas is from what we call associated gas, so gas that we've obtained from the production of oil. However, the concern there is when you're looking at the gas economics, you're looking at the economics of gas and oil, and you're looking at the economics of an associated gas and gas that is from a gas well. You find out that with oil, being with the associated gas, most of the investors take credits for the money they will make from the oil, so they are ready to take the risks and go into investment into the dry gas, into the associated gas, knowing that, okay, whatever happens, they are still making profit from oil. Now, but when you are going into gas development itself, where there is no oil and that well produces predominant gas, the whole thing changes. For one, the risks are much higher because the cost, the economics or the money you get from selling gas is not as much as you get from oil. And also the margins for error in oil, you can make some losses, and then the gains you make will even outshadow the losses you made. However, in gas, there is no room for that much error, just like we have in the downstream sector. So what am I trying to say is that, yes, I see the efforts, but in order for these efforts to go from just being an effort, then into implementable actions, into desired outcomes, right? We need certain imperatives. This is what I'm about to say. Number one, right? What we do not want is to have this gas taken and then we create the export value chain and then we just export it. I don't think that's what we're driving at. We're driving at deepening domestic consumption in a bid for energy transition to be achieved. Similarly, we're also intending to industrialize, because if you don't consume energy, you don't industrialize. Now, what does that mean? That if you are trying to repurpose that gas, dry gas that is coming from a gas well to the domestic market, you need to fix the domestic market value chain altogether. Number one, electricity. There's a lot of debt and energy theft in the electricity sector. We need to look at how we can make sure that the electricity, which takes about 60% of Nigeria's gas, can actually pay for the power, and perhaps leveraging the various electricity act that empower states of 2023, that empower states to produce and generate and distribute electricity. We can leverage that to decentralize the electricity. Number two is that we also need to perhaps look at the cost of the gas pricing, the raw gas pricing. That's different from the one we buy at the refilling station, so that it could encourage investors, and also look at perhaps making sure that there is sanctity of contracts when it comes to that. Because if not, what will happen is people will build facilities, take the gas out, or build export facilities and keep exporting, and that's the idea. So I'm saying that we're going the grass is not as green. On the other side, as we think, there are certain infractions across value that we need to take if that must be sustained, and then if we industrialize gas.
Let you go, Doc. Something happened within the Nigerian Upstream Petroleum Regulatory Commission last year when they had the 2024 oil block licensing round policy. No, there was this irregularity that most players complain about, and that irregularity falls back to the issue that it was not done with clarity. Now, 2025 exercise is coming from 1st of December 2025, and to avoid such irregularity and to make sure that they follow the due process of the PIA law, what do you expect them to do so that we won't have the acrimony of there was irregularity, there was no way they have done it in a way that everybody will be satisfied, but to do it in a way that everybody will be satisfied? What would be your advice to NUPLC at this point in time?
All right, thank you. I think it's pretty difficult to do things that everybody is satisfied, but I'm going to answer in this way. I personally am a strong advocate for the concept of lessons learned. We've done licensing rounds. We've even done licensing rounds under the PIA, so we know better the challenges that we couldn't have known beforehand. Because, I mean, just like divestments under the previous petroleum law that we're operating and the PIA are completely different. So, again, we keep there's room for improvement. The only room at the top is the room for improvement. So definitely, I think lessons learned is very critical, but just making sure that there is clarity as to what people are bidding for. For example, people shouldn't decide that, okay, look, I'm going to bid with my partner for this particular asset, and at the end, they are merged with other partners that they perhaps don't have business relationships with, and given another asset. You know, they're given an asset, but they have to now work with partners that may not share the same philosophy like theirs. It should be a case that enough information is given out, people are guided, and your evaluation and eventual award is on the basis of the bid you put forward. There's no modification where the regulator is telling you, okay, look, we're going to assign this, but you have to work with these other partners. I think that's one of the biggest causes of the breakdown. Other than that, just making sure people are clear up front. The rules of the game are not changed within the game. They are changed before they are agreed on what's going to help. But do note that the Petroleum Industry Act is a developing child. We're still a child, very young, and there's a lot of lessons learned along the way. What makes us to be resilient, what makes us to be successful, is how well we handle those challenges as they come up, and how well we adapt it and learn from it and make it work for us as a nation.
For the indigenous company that will be coming up with their bid on the 1st of December, we could also understand that majority of them last year got some bid opening, and they got some licensing, particularly from the Petroleum Prospective Licensing PPLS. But for this year, what would be your advice to those indigenous oil and gas companies? Because we have a lot of them coming up with their bid, but it's not everybody that will get it, Sha. But what would be your advice to majority of them that are putting their bills on for the 1st of December 2025?
All right, so my advice is, as you're putting your bid on, they must think synergy, I think one thing that we're not doing in Nigeria a lot, I see that a lot abroad, is collaboration and synergy. A lot of people want to have the pie for themselves. So to make a stronger case, think about technical and commercial partnerships, maybe with fellow Nigerian companies or even with other interests, just so that you can make a strong case. And because you don't want to go through that process and end up getting the license revoked because you could not fund the process of developing the asset. So synergy is top of my mind. Everyone just going in there ready to do the best they can for our nation, because it's basically everybody putting their own slice of efforts towards building, nation building. That's basically it. So that's my advice to any company going out there.
I was thinking I will let you go but in less than 2 minutes, I'll let you go right now. The federal government has suspended the 15% import tariff on PMS and diesel. Doc, what is your take?
Well, you're speaking. I'm going to read something to you. So it's a bit of a prophetic thing that you've asked this question, because I wrote an article that come out today. It says, Wisdom Enang commends federal government's reversal of 15% imports on PMS and diesel, flags inflationary concerns. Now, I have two concerns, right? And the first concern I have is inflation. Inflation is cooling, and we're expecting by next MPC meeting that we're going to see inflation dip below 18%. You bring that thing up, this is what's going to happen. I'm going to paint a very quick scenario here. Now, what you've done is you've added 15% to the pricing, and of course, inadvertently, you have also added a 15% leg room that the Dangote can comfortably increase their price. Why is that? If 15% of imported petrol makes it to be about 1,200, as an example, that's just an example, 15% on the normal price, and Dangote is selling at, say, 870, then the Dangote knows that, okay, look, we still have, if they want to import with 15%, it will go to 1,200. That means rather than sell for 870, I can actually sell for 1,100. And that will still be better than the import. Now, at that point, are Nigerians paying for the value that of production and sales for marginal reasonable profit, or are they paying because an increase in leg room has been created for profiteering and profit-making appetite? So that was the risk I was cautioning against, that we're going to create impact on inflation, but we've also increased the leg room for profitability for the Dangote refinery, and all in all, is going to erode the spending power of the average Nigerian. So, based on this concern, I very much applaud the federal government, and I think it is very courageous to note that to have a government that can do review, look at the realities, the policy vis-a-vis the consequences and the realities, and change their mind. For this very basis and these reasons alone, I am really excited that the federal government took this decision, and I've written an article about it, like I've said.
That article out and see what we can make out of it. But thank you so much for coming on the show today. And I also want to assure you that by 3rd of December 2025, the report of the licensing build of oil block will be out, and definitely we want to engage you on the report also. But thank you so much for being part of the show today, Dr. Wisdom Enang.
Thank you. Enjoy the rest of your day and the rest of your week. God bless you.
Thank you so much. I've been speaking with Dr. Wisdom Enang, energy consultant, in regards to one of the key aspects of the Nigerian economy that the federal government is so key about, licensing oil block to companies in Nigeria.